Good morning, everyone. Welcome back to this discussion on accounting standards. So, today we are planning to continue on this requirement related to consolidation. In the previous session, we started with the consolidated financial statements. And for the consolidated financial statements, we were talking about a relationship of holding and subsidiary. Okay. So, let's do a quick recap of whatever we have covered so far. Because largely, in terms of our discussion, it was all about understanding of some of the basic concepts which are required to be applied at various places. Okay. So one, we understood about holding company. Holding company is the company which will have control over the other company. Okay. Under Indian GAAP, we understand the moment we have more than 50% voting rights or the shareholding, that is when you get the control. Okay. And the investee in which the control is established, we call it as subsidiary. Now, the moment we have holding and subsidiary, so this requirement of consolidated financial statements will also arise. In which case, what do? You will prepare consolidated financial statements wherein both these entities will be considered as if it's a single economic entity. Means holding as well as subsidiary company. Further, as around the holding and subsidiary, there are certain aspects which are in relation to the accounting policies, intercompany eliminations. Okay, so there are a lot of other points which are required to be considered, because when you consolidate a subsidiary, so what is important? Important is to understand the procedure which is involved. Okay, so let's try to now talk about that consolidation procedure in relation to holding and subsidiary. All right, so we'll again take an example to discuss this. So let's suppose there are two companies, H Limited, that's the holding company, and S Limited, that's the subsidiary company. Okay. Now, there are two ways a subsidiary may arise. One, it could be a newly incorporated company. Other one, wherein a company is acquired, wherein a subsidiary company is acquired. Okay. So both the ways a subsidiary can be created. Now, because the consolidation is required to be done, wherein we will pick up. Okay. So if you look at the approach, H Limited will pick up all the assets, all the liabilities of S Limited. Therefore, one important aspect which get attached to this happens to be the accounting policies. Okay. So therefore, accounting policies of two companies should be aligned. Yeah. Other one, it may happen that during the course when these two companies were operating, so there were some transactions between these companies. Maybe S was selling some goods to H. Maybe H is providing some services to S. Maybe H has given a loan to S. Yeah, it could be of any nature. Now, because you are preparing the CFS, wherein you are not considering these two as two separate entities, in fact, in a way, a single entity. So that's why the similar approach is required to be considered, which you follow in respect of financial statements of any company. And what is that? That any transaction which would take place outside the company, you will consider. Yes or no? Yeah. So let's try to understand this. Say if a company has got 3 branches. Okay, we'll come back to this example. Let's suppose A Limited has got 3 branches. B1, B2, B3. And let's suppose these branches are selling to each other. Say branch 1 is selling to B, B2 branch 2 is selling to branch 3. Okay. Now during the year, let's suppose goods worth of 5 crore have been sold by branch 1 to branch 2. Branch 2 has also sold for 5 crore and branch 3 has sold outside the company. Let's suppose branch 3 has sold outside the company 15 crore. Now in this case, if you prepare the financial statements of A Limited, what will be the turnover? We talked about it. What will be the turnover of A Limited? Tell me quickly, everyone. What will be the turnover? What will be the sale that you will consider of A Limited? Yeah, Tambeshwari, Kushi, Pranav, they are saying 15 crore. Very good. So that means you will not consider these two transactions. Why? Because these have taken place within the company. So anything which will take place outside the company you will consider. So therefore, what will be the turnover? 15 crore. Or what will be the sale amount? 15 crore. Similarly, now when you are looking at these two companies, H and S, so what do they comprise of? They comprise of one group. They comprise of one group. So therefore, if this group will have any transactions outside the group, if this group will have any transactions outside the group, that is something you will consider for CFS. But if this group will have any transactions which are within the group, what do you mean by within the group? Means between these companies, which is also called as intercompany transactions, wherein the companies belong to the same group. So will you consider that? Tell me, will you consider that? The answer is no. Yeah, Pranav says no. So you will not consider that. And we have also tried to link this as to why that is not required to be done. Okay. So whenever consolidated financial statements are prepared, so there are certain aspects we need to consider. One, we just discussed, there has to be an alignment of accounting policies. Of the group companies. Number two, there will be certain adjustments which are required to be done. And what is that? Intercompany eliminations. What do you mean by intercompany eliminations? It means that if there are any transactions within the group, so you can say intercompany transactions. So we need to eliminate those. If there are any intercompany balances, now transactions may also result into some balances which are outstanding at the year end. So if there are any intercompany balances, they also need to be eliminated. So what do you eliminate? So this is something that you eliminate. Intercompany transactions, intercompany balances. Fine. Yeah. All right. So now moving further. In relation to intercompany eliminations, there are a lot of adjustments which are required to be done, but we'll get on to that part slightly later. Let us now also consider one adjustment which is required to be done at the time of consolidation. So we can say these are all what? These are adjustments. Okay, so we'll look at all of these adjustments one by one to begin with. And when we'll prepare the consolidated financial statements, so some of these things you'll get to see. Okay. There is another adjustment which is required at the time of consolidation. Again, a very, very important one, which you call as computation of goodwill or capital reserve. Okay. Now, let's try to understand as to what is the relevance of this, because some of you may be thinking that we just discussed this. So when we covered amalgamation, therein we were computing goodwill or capital reserve, but therein we were computing goodwill or capital reserve only in the case of amalgamation in the nature of merger, sorry, in the nature of purchase, not in the nature of merger. So what is this? Why is this required? Can we say it's similar to that? Okay, so let's try to understand this. Say a company has been acquired. Now what is the acquisition? H Limited has acquired S Limited. So H Limited acquires S Limited. Now what is the date? Date is 16th of December 2024. So this is the date when this acquisition has taken place. Fine. Now, starting from 16th December up to 31st December 2025, what would be the requirement? The requirement would be that H Limited will have to prepare CFS. Okay. Yeah. So H Limited would be required to prepare CFS for this period. And of course, for the years thereafter. Yes or no? Now, for this consolidated financial statements to be prepared, there's one part we need to understand. In the books of H Limited, there would be a purchase consideration. When H Limited will acquire S Limited, so will H Limited pay something for that acquisition or not? Will H Limited pay something for that or not? Tell me. Yes. Yeah. Anil says yes. Great. Now, as against this purchase consideration which H will pay, H may receive net assets of S Limited, and the value of those net assets may not match with the purchase consideration. Correct? For example, H may give a purchase consideration of 100 against which the net assets which are received by H could be only 80. Okay, so there could be an excess payment. Similarly, H may give purchase consideration of 70 as against the net assets of 80. So this payment could be in excess. Yeah. So when this payment is made and there is an excess or a shortage, so do we need to record that or not? Tell me, do we need to record that or not? Yes or no? Tell me, what do you think? Should that be recorded or not? Yeah? Great. Now, this recording, when will this recording be done? On this particular date? Because this is the date when the acquisition has taken place. Yes or no? So this is the date when this recording should be done. Yeah. That's why whenever we will start with the consolidation exercise, what do we need to do? We need to get into this calculation, wherein if there is any excess payment, then we may get goodwill. And if there is a short payment, it will result into capital reserve. So you may be thinking that this is exactly similar to the one that we discussed in case of amalgamation. That is right. That is absolutely correct. Okay. So that's how we'll also approach this. Yeah. But the point is that unlike in case of amalgamation, wherein you had two methods, you don't have two methods of consolidation, or you don't have two methods to record this acquisition. Okay, so there's only one method of recording the acquisition. And what is that? Something that we just looked at. Okay, so this is the only method you will follow. All right, clear on this? And any questions on this? Tell me quickly. Any questions on this? No? Ankit is clear. Great. I think Ajay is also clear. Very good. All right. So now, in addition to this computation of or goodwill reserve, there's one more aspect which is required to be considered. So I think we can also talk about that. And then what we'll do is we'll just look into some examples as around some of those things. We discussed one concept of wholly owned subsidiary and partly owned subsidiary. Correct? So can you tell me, there was an item under partly owned subsidiary that we discussed. What do we call that as? Tell me quickly. Great. Hardik says that is minority interest. Very good. Yeah. Now this minority interest, why is this required? Can you tell me what is the meaning of minority interest? Why is that required to be considered at all? Tell me quickly. Why is that required to be considered? Tell me quickly. Okay, so Nitin says minority is the one which will have significant influence. Hardik says those shareholders have the minority holdings. Great. Riddhi says have to pay benefits of minority. Okay. Anyone else? Quickly. About the minority. Okay, so let's try to look into this minority interest also. Okay, so I can see some of your responses on Larry, Sania. I'll come to all of these points. Yeah. Okay, so now we discussed that when it comes to the consolidation, so how will this CFS be prepared by the holding company? For the preparation of the CFS, the approach which is followed is called as line by line addition. Okay, line by line addition. So what does it mean? It means that all the assets, all the liabilities of subsidiary will be picked up by H Limited and added in its financial statements. Okay, so that means when H will prepare CFS, then what will happen? All the assets of H, all the liabilities of H, similarly, all the assets of S, all the liabilities of S will be added together. Okay, of course, there are some adjustments you will do around intercompany eliminations, etc. And thereby, what will you get? You will get the CFS. Correct. So that's how you will get the CFS. Okay. Now, in this case, let's try to understand one problem. So these are picked up 100%. 100%. Fine. Yeah. So that's the understanding that we have or not. Tell me quickly. Yes or no? So that is what you do in case of line by line addition. Over to you quickly. Please confirm. Yeah. So Pranav says yes. So that's what you'll do. Great. Riddhi has the same answer. Dilip has the same answer. Now, let's try to understand. Say, for example, in this S Limited, H Limited holds 80%. Okay. And there's one more party. Say P Limited. Now P Limited holds 20%. Now today, if you talk about net assets, so what do you mean by net assets? Assets minus liabilities. The net assets of S Limited, can we say, are entirely owned by H Limited? Can we say that? Can we say that? Tell me. The answer is no. A portion of net assets of S Limited are also owned by whom? Tell me. Other than H are also owned by whom? P Limited. Yeah, so that's what Larry says. Great. Therefore, in the CFS, when H will pick up 100% net assets, so can we say that is appropriate? Can we say that is appropriate? Tell me. If H will pick up 100% net assets of S, can we say it's appropriate? Anil says no. So that means 20% of the net assets which have been picked up over here. Okay. 20% of the net assets which have been picked up over here, they do not belong to the group. So CFS that you prepare is for the group. And what does this group comprise of? H and S. So now in this financial statements of the group, 20% of the net assets do not belong to the group, but they have been included in the financial statement. So what do you do to balance that? What do you do to balance that? To balance that, you will have to present one kind of liability, a kind of liability in the financial statements to balance it out. And what do you call it as? Minority interest. Okay. And what do you call it as? Minority interest. So why is that required to be created? So that you can balance it out. Understood? Understood the purpose of minority interest and why is that required to be sort of recognized in the financial statements? Everyone clear? Yeah. So now this is again one item which you need to compute when this is again one item which is required to be computed at the time of this acquisition. Of course, depending on whether there is any minority interest or not. And when will that arise? When the holding company holds less than 100% shares. So if the minority interest exists, okay, so that also needs to be recognized on this particular date. And that will carry forward. Okay, so that means this goodwill or capital reserve, whatever be the case, that will be carried forward. Similarly, this minority interest, whatever that you have, that will also be carried forward year on year. That will be carried forward year on year. Yeah, clear on some of these adjustments? Yeah, are you clear on some of these adjustments? Everyone, quickly, please confirm. Yeah, simple, easy to understand. Any questions around this? Tell me quickly. Any questions, doubts that you may have as around this, please let me know. Okay, everyone clear? No questions? All right, great. So Tambeshwari is asking how to calculate minority interest. We'll get on to that. Okay, so how do you calculate? If you calculate, if there are some adjustments over there, some of these things will cover. Okay, as of now, we are not looking at the calculation. As of now, we are just trying to understand conceptually what are these items and why are these required to be recognized? How do you recognize them? Their measurement aspect is now we are planning to cover. Sai is asking, sir, while doing amalgamation, are they 100% take only over? I couldn't understand, Sai. So what do you mean by this? Are they 100%? Okay, so are you trying to check if there is any sort of minority interest over there? No. In case of amalgamation, you will not have that situation. Huh? Because in that case, the other company comes to an end. Please understand. Huh? I think at times you ignore that aspect. Currently, this S Limited is continuing. Yes or no? So when this continues, so this may be owned by H as well as other parties. But what if S comes to an end and it is merged with H? So that question doesn't arise. Huh? Okay. So understood. Now clear on this. So that question does. So this question becomes invalid. Understood. So I'm clear on this. Yeah. Clear on this. Sai, are you there? Okay, great. So now we will get on to this query of Tambeshwari. Sir, how to calculate. Okay, though she asked me about minority interest, but we'll discuss all of these items, goodwill, capital reserve, as well as this minority interest one by one. Okay, so let's get on to some examples now. So let me just pick up some example. Just give me a minute. Huh? We'll pick up some examples. Okay. All right, so we can pick up this example number one. A very simple one to begin with. Okay, yeah. The following information is given as at 31st March X1. Two companies, P and S, non-current assets, PPE, investment in subsidiary by P in S, appears to be the case, yeah. Net current assets of two companies, then the capital of two companies, reserves and surplus only in case of P. P Limited acquired 100% shares of S Limited on the date of acquisition. Sorry, on 31st March, which is also the date of reporting. Okay, so the day when the balance sheet of two companies is given to us. So for that date, we also understand acquisitions. On that date, acquisition has taken place. Since P Limited has acquired S Limited, what do we need to do? We need to determine the goodwill or capitals. Okay. In this case, P Limited acquired all the shares of S Limited by paying 1000. So how do you get 1000? Can you tell me? How do you get 1000? Means 1000 is paid by P to acquire S. So can you tell me how do you get this? Over to you quickly. How do you get this? Because purchase consideration is not given. Okay, great. So Hardik says that's the amount investment in subsidiary. So this is your cost of investment. Cost of investment means the amount which would have been invested by P and S. Clear? So that is how you get this. Okay, clear? All right. Now, this amount of purchase consideration, what do you need to do? You need to compare this with the net assets. Now, in case of S Limited, can you tell me what will be the amount of net assets? For S Limited, what is going to be the amount of net assets? For S Limited, what is going to be the amount of net assets? Quickly, anyone? For S Limited, what is going to be the amount of net assets? Any thoughts quickly on this? Tell me quickly. Yes, that's the capital. Correct. That's the capital that you have. Okay. Now, net assets, one can say, are equivalent to this issued capital and the reserves. So for S, what is this amount? 1000. For S, this amount is what? 1000. 1000. Right? And the purchase consideration is also 1000. So do you get any goodwill in this example? Do you get any goodwill in this example? The answer is no. Why? Because both of these amounts are matching. Okay. Yeah, simple. Okay. Another example. We'll just try to modify the previous example now. Following information is given as at 31st March X1. Now you are given non-current assets, PPE, investment in subsidiary, net current assets, 2,500. So I think this information seems to be quite similar. The only thing which changes now is if you look at the capital, if you look at the capital of subsidiary, yeah, so the amount seems to have changed. Yes or no? Amount seems to have changed. Correct. Now, in this case, can you tell me what is going to be the amount of net assets of S Limited? Tell me what will be the amount of net assets of S Limited? Tambeshwari says 1000, Riddhi says 700. Okay. Ragini is getting 1000. Can you also tell me how are you computing this 1000? So, what all components you are considering while doing that? We just discussed this. So, what all components you are considering? Okay, Sarthak is also getting 1000. Yes. Great. So, Hardik says 500 plus 500. So, what do you include in 500 plus 500? Okay. So, Ragini is saying share capital plus reserves. Very good. So, that's the approach you need to consider. Huh? Same is the response from Anil. Now, when you compute the net assets of S Limited, what do you need to consider? We just discussed issued capital and reserves. Okay. So if you do that, what are the two components you will pick up? This 700 and 300. Yeah. Here again, the amount of net assets of S Limited is similar to what we got in the previous exam. But the breakup is different. Okay. So whether the breakup is 700 plus 300, does it really matter? No, because we need to pick up the amount principally. So we need to look at as to, what is going to be that amount. So whatever is that amount, we'll pick up that amount. Yeah. So in this case, tell me what is going to be the amount of goodwill or capital reserve? Over to you. What will be the amount of goodwill or capital reserve? In this case, again, nil. Yeah. So Khushi is getting nil. Dilip is also getting nil. Yeah. And why nil? Because purchase consideration is 1000 and the net assets acquired are also 1000. Okay. Clear? Good. Neeru is also getting 1000. Sorry, nil. All right. So let's look at another example. Now, following information is given as at 31st March X1. Now, in the questions, please be very, very careful. So, what is it that you need to care about? See, this goodwill or capital reserve that you compute. When do you do this computation? Can you tell me? When is this computation required to be done? Quickly, tell me. When do you need to compute this goodwill or capital reserve? Very good. So Hardik says date of acquisition. Okay. Now, in the examples that we have just discussed, information was available to you as on the reporting date. And by chance, acquisition date and the reporting date were same. Yes or no? But it's not necessary that they will always remain same. So we need to be careful about it. Okay. Now, the information, the balance sheet of two companies is available on 31st March X1. Now the investment in subsidiary is 1200. Okay. So then we are given issued capital reserves of S Limited. In this case, can you tell me what will be the amount of goodwill or capital reserve? Over to you. I think we have discussed this. Great. So Riddhi is getting goodwill of 200. Aisha is getting goodwill of 200. Okay. What about others? Okay. Neeru is getting the same answer. Very good. Hardik is getting the same answer. What about others? Quickly, huh? Okay. Dilip, Bhavna, Sanya. Very good. So I think everyone is getting the same answer. Yeah. Okay. So Anil has got the same answer. Great. Okay. So I think goodwill or capital reserve we have just looked at. Yeah. So we have discussed as to how do you compute it. But of course, there are going to be some more complexities which we'll cover as we move further. Okay. Let's also touch upon now on the computation of minority interest. Okay. So we'll just touch upon principally on this concept of minority interest, wherein we'll try to understand as to how do you compute it. Okay. Now, as around the minority interest, the approach will be to pick up the share of minority from the net assets. As simple as that. So if the net assets of the subsidiary or the investee is 100 and the minority holds 15% in that. So what do you do? 15% of those net assets belong to minority. So how do you compute the amount of minority? Simply pick up the proportionate share of net assets. Pick up the proportionate share of net assets. Okay. So that is what you need to consider. So every time minority interest is required to be computed, what will you do? What will you do? Every time you need to get on to the proportionate share. Proportionate share. Okay. So now, once again, we are given balance sheet of two companies, P and S. Yeah. So this is on 31st March X1. And the following information is also available. So it says P Limited acquired 80% shares of S on 31st March. Now, by chance, here again, the date of acquisition is same as the date of reporting. So therefore, in the given case, what do we have? What do we have? We have minority. Yes or no? Because if 80% shares are held by P, so therefore 20% are going to be held by some other party or some other parties. So what do you call them as? Minority interest. Okay. So therefore, in this case, you are also required to consider minority interest. Okay. Now, in the given example, purchase consideration is what? 1000. Purchase consideration is 1000. And the net assets of S Limited, what is that amount? That is again 1000. 700 plus 300. Okay. So that is also 1000. Okay. Now, in this case, if one has to look at the minority interest, if one has to look at the minority interest, so what do? You will pick up the proportionate share of net assets. So what is going to be that amount? 200. So what is going to be the amount of minority interest? Tell me. 200. So how do you compute that? Very simple. Very simple. 1000 into 20%. 1000 into 20%. Correct. Now, in this case, let's also try to compute. Let's also try to compute the goodwill or capital. So in this case, purchase consideration is what? 1000. Purchase consideration is 1000. Okay. And the net assets which belong to the parent will be 80% of the total value which is given. So net assets which belong to the parent will be what? 80% of the total value. Yeah. So this 1000 would have been paid for what? This would have been paid for 80%. Yes. So therefore, what do you have? Therefore, you have net assets of 800 as against purchase consideration of 1000. So therefore, what do you get? Goodwill. So therefore, in this example, you will get goodwill. Okay. Yeah. Clear? Okay. And Riddhi is asking to, yes. So that's the minority. Yeah. Anyways, we have looked at that. Okay. Now, let's move further. Let's also talk about some other type of adjustments which may arise. Okay. Now, continuing on the same example that we were discussing. When H Limited acquires S Limited, in some of the cases, what may happen is there may be an agreement, there may be an understanding. So, what is that understanding? Let's try to look at that. Say on this date, which is 16th December 2024, H Limited acquires S Limited, and they may agree that some of the assets, some of the liabilities which S Limited has recorded in its books of accounts will be picked up by H at some different values, or you can say values other than the book value. Now, this is again similar to what you have discussed under amalgamation. Okay, so that is what you call as agreed values. Yeah. Now, that agreed value will require some sort of remeasurement, or you can say revaluation. Yeah. Now, that revaluation may result in increase in the value or decrease in the value. You don't know. So, that may vary. Again, there's no standard answer available for that. That every time this value will go up or this will go down. But this is also one of the possible situations which may exist and which we need to consider. Okay, which we need to consider. So, this is again a very important aspect. Now, how is that going to impact? We'll have to understand. So, when the assets of S Limited are acquired, so what do you call them as? Net assets. So far, all of the discussions we were doing, all of the computations we were doing, in the calculation of net assets, we were taking up only the book values of S Limited. Yes or no? So far, we were taking only the book values. But please remember that this can be the book value or the agreed value. Now, that information will always be available to you in the question. So, you don't need to think about it. So, the question will tell you that this is the value at which assets or liabilities of subsidiary company are required to be taken over. Okay. Yeah. So, this one more aspect one needs to consider when you are required to calculate goodwill or capital reserve or say the balance sheet or any of these computations are done. Okay. Yeah. Now, another concept. At times, what may happen is that a subsidiary or a company is acquired during the middle of the year. Okay. Something that we have been discussing. So this acquisition, let's suppose, takes place on 16th December. Yeah. So sometimes during the year, this acquisition is taking place. Yes or no? Sometimes during the year, this acquisition is taking place. Now, in this case, what do you do? In this case, one more aspect is required to be considered. So we can say this financial year, okay, 1st April 2024 to 31st March 2025. Okay, so this is the financial year that we have. We can say this financial year has got two parts. What is the first part? This is the first part, which you call as pre-acquisition period. Yeah, pre-acquisition period. And this you call as post-acquisition period. Why? Because anything that you have before the acquisition, you will call it as pre-acquisition. Anything that you have after acquisition, you call it as post-acquisition. Okay. Now, during this financial year 24-25, subsidiary may have made profits. So if you look at the subsidiary company, it may have earned profits. Now the question is, how do you treat them? How do you consider them? Okay. Now for this, you need to remember one point, that any profit which is earned up to the date of acquisition, what will you call it as? Pre-acquisition profit. So every time you have this type of situation, what do you need to do? You will have to split the profits, split the earnings, or split the losses. So whether it's a profit or loss, into two parts. One that belongs to pre-acquisition period, so you'll call it as pre-acquisition profit. One that belongs to post-acquisition period, that you will call as post-acquisition profits. Okay. Now the question is that why is that required to be considered? Why is that important? See, something that belongs to pre-acquisition period, that is what you call as the one for which the purchase consideration has been made. Let's try to understand this aspect. When H Limited will acquire S Limited, okay, or let me just write it over here. So if let's suppose H Limited is acquiring S Limited on 16th of December, okay. Now, anything which will belong to S Limited up to this date, whether that is about assets, liabilities, all of those things will have to be considered by H. And I'm sure S would have also considered that. Accordingly, they will agree on the payment. Accordingly, they will agree on the purchase consideration. Yes. And that everything will also include the profits which are earned up to this particular date. Yes or no? Yes or no? So any profits which S would have earned up to 16th of December, will they not be considered while agreeing on the payment to be received by H Limited, to be received from H Limited? Tell me, will that not be a part of consideration? Tell me, what do you think? Will that not be a part of consideration? What do you think? Logically, if you were to get into any sort of transaction or any such deal, so will that not be a part of consideration? The answer is yes. That will always be a part. Why? Because anything which S would have earned up to this particular date, that will also get added to the net assets of S. Because net asset doesn't mean that net assets when you prepare the balance sheet. So any earning that you keep having during the period, that keeps adding to the net assets. Okay. Now, what is the relevance of this? So the relevance is that this will have an impact on the cost of investment as well as your goodwill or capital. So that is one. And we'll try to understand this better with the help of some examples. Another aspect. See, whenever you have any dividend distribution, okay, now that dividend distribution again needs to be looked at. Let's suppose sometime on this date, dividend has been paid. Okay, now dividend has been paid. And this dividend has been paid for the year. Yes or no? Now, in this case, you will also be required to work out that this dividend which has been paid, where does this dividend get paid from? Is this getting paid from the profits which are earned during this period, or that is earned from profits during this period, or both? Or both. Now, if there was a situation something like this, so let me just simplify this. Let's suppose 31st March 24 is the date when the acquisition has taken place. Okay. And on this date, there is a dividend payment. Now tell me, where does this dividend come from? Obviously, from these profits or from these reserves. Why? Because if you are paying the dividend now, this will obviously belong to the earnings prior to the acquisition date. Yeah. And everything prior to the acquisition date belongs to pre-acquisition. Okay. Wherein you are not required to split the year into two parts, pre and post. Yes or no? So this is a very, very simple type of situation for any calculations which are required around this. Correct? But when it comes to a situation like this, wherein the acquisition has taken place during the year, in that case, you will be required to split the profits, split the P&L into two parts. And you will also be required to check where does this dividend come from. Sometimes the question may tell you that you need to pick up the dividend from this period's profits. But if the question is silent, so what will you assume? Tell me, what will you assume? If the question is silent, you'll assume that the dividend has been paid from the profits for this entire year. Means some part of the dividend has been paid from pre-acquisition profits and some part of the dividend has been paid from post-acquisition profits, which again will require a split of this. Okay. And which will have some accounting adjustments. So we'll also talk about those accounting adjustments with the help of some examples. Okay. Clear? All right. So I can see this question from Sai. He's asking, sir, when a listed company is acquired, it will be done with market price. That is face value plus premium. But the balance sheet consists of face value only. There, how this additional amount more than capital and net worth of Wendy company comes in the balance sheet as purchase consideration? Can you please explain? So I couldn't understand the query, because when you say how does this balance sheet of Wendy company comes, I'm not clear on this. For you to understand this concept, okay, or maybe if I have to just try to understand your concept. So conceptually, if you want to get into this purchase consideration, okay, let's try to think about it. Today, when this acquisition is taking place, okay, now this is 16th of December. So what will happen? Let's suppose 100% shares of S Limited are getting acquired. Okay, so what will happen? A valuation of S Limited will be carried. Its valuation will be carried. Now, in this valuation, all the aspects of S Limited will be considered. Past earnings, future earnings, all of these things, like you just mentioned, fair value. And on the basis of that value, what do you derive? An amount. So both these parties will negotiate with each other. Yes or no? So H would want to pay lesser amount. Shareholders of S would want to get higher amount. That's how you go and purchase something. Yeah. So on the basis of this valuation, what will be finalized? Purchase consideration. Purchase consideration will be finalized. Okay. And against this purchase consideration, what do you receive? Shares of S Limited. Shares of S Limited. Okay. So now, when the shares of S Limited are acquired, if you are saying that we need to record that at fair value, so of course you are doing that. That's why you are getting either the goodwill or capital reserve. So if that was the question, okay, and that is why you are getting goodwill or capital reserve. But if you are looking at around S Limited, it's a running company. So whether its shares are getting sold to H or to some other party, that should not have any bearing on the financial statements of S. So S will continue the way it was going on. H will continue the way it was going on. But in their consolidated financial statement, some of these adjustments will get reflected. Okay, so that's how it works. Clear? All right, so now what we will do is we'll look at some examples as around some of these things around the revaluation, around this pre-post acquisition profits, etc. that we discussed. Okay, yeah. Any questions, any doubts so far? Tell me quickly. Any questions, any doubts? Quickly, yeah. Any questions, any doubts if you have? No? Sure? All right. So Neeru, Nitin, they've confirmed they are clear. Great. All right. So anyways, we are going to discuss some more examples. Okay. Some of these practical examples with which you should get some more clarity. Anyways, yeah. So moving on to this example number 5. All right. H Limited acquires 70% shares of S on 1st January 2000 X1. Now, every time, please remember these dates because these are important. You need to ensure that the acquisition is also taking place on the same date. Otherwise, some adjustments may be required. Okay. On the date of acquisition, paid up share capital of S Limited was 10,000 equity shares of rupees 10 each. Accumulated reserve was 1 lakh. H Limited paid 1,60,000 to acquire 70% interest in S Limited. Okay. So we are given purchase consideration. Purchase consideration. What is that? 1,60,000. Fine. Assets of S Limited were revalued on 1st January X1. And this resulted in a revaluation loss of 20,000. So now, tell me, how will this impact the calculation of goodwill or capital? So on the date of acquisition, what do we need? Two things: purchase consideration and net assets. Yes or no? Purchase consideration and net assets. So these are the two things that we need. So purchase consideration is available with us. Okay. 1,60,000. Now, how do you compute net assets? That will be capital plus reserves. That means 2 lakhs. That means 2 lakhs. 70% of that is acquired by H. 70% of that is acquired by H. Okay. So therefore, what do you have? Therefore, we can say 1,40,000, 70% of net assets. 1,40,000 is the total amount of net assets. If you go by the book values, what is the amount of net assets? Can you tell me quickly? 1,40,000. Yes or no? Rati Malini is getting the same amount. Great. But they have agreed to value the assets in a different manner. So they will not go by the book values. So that's why that adjustment which they have agreed, we need to incorporate that. And what is that adjustment? That the value needs to be cut down. That's why there is a revaluation loss. Okay. Now, that's why there is a revaluation loss. Now, if there is a revaluation loss, so 70% of that needs to be incorporated here. 70% of that needs to be incorporated here. Yes or no? Yeah. So therefore, what is the total amount of net assets after incorporating this impact of revaluation, which belongs to H? That is 1,40,000 less 14,000 means 1,26,000. Okay, which means 1,60,000 has been paid to acquire the net assets having value of 1,26,000. So therefore, what do you get? Goodwill or capital reserve? Therefore, what do you get? Goodwill or capital reserve? Goodwill, because excess money has been paid. And what is the amount of goodwill? 34,000. 34,000. Clear on this? Yeah. So at times in the questions, you may be required to compute net assets after considering these revaluations. Okay. Clear on this? So at times this is possible that you are required to get into this adjustment. All right. Yeah. Okay. Now let's look at another example. Okay. So now in this case, you need to solve this and let me know the amount. And please don't look at the solution. Okay. Pooja is asking, how do we calculate the net assets? So net assets is very simple. Equity share capital plus reserves. So that's how you compute it. Okay. Anyways, in this next example, we'll do the same thing. A Limited acquired 70% interest in B Limited on 1st January X1. On that date, B Limited had paid up capital of 1 lakh and accumulated balance in the reserves of 1 lakh. So what is going to be the total net assets of B Limited? Tell me, what will be the total amount of net assets of B Limited? Pooja, over to you. What will be the total amount of net assets of B Limited? Yes, tell me. 2 lakhs? Yes or no? Yeah. So the total amount of net assets of B Limited. That is what I'm asking. What will be the total amount of net assets? Great. Manvi is saying total amount will be 2 lakhs. Yes or no? Total amount will be 2 lakhs. Now, on that date, assets and liabilities of B were revalued and there was a revaluation gain of 20,000. So what does it mean? This value of 2 lakh will become 2,20,000. Correct? So this value of 2 lakh will become 2,20,000. Correct? Now, on this 2,20,000, what do you need to do? We need to pick up the proportionate share. So what will be the proportionate amount? So if you compute 70% of 2,20,000, what do you get? So let's quickly solve this. 2,20,000 into 70%. So what do you get? 1,54,000. Yeah, so that's what Manvi is getting. Ragini has the same answer. Great. Pranav has the same answer. Very good. Okay. Now, to acquire the net assets worth of 1,54,000, A Limited has paid 1,30,000. So therefore, what should you get? Goodwill or capital reserve? Balesh says there will be capital reserve. I think Nitin has also shared the calculation. Yeah, great. Okay, so Aisha, Riddhi, they are also getting capital reserve. Yeah, which is very clear. Huh? So in this case, what do you have? You have capital reserve. Yeah, so everyone clear? Pooja, you are clear now? Okay, so Larry has got the same answer. Dilip, Ratimalni, they are getting the same answer. Pooja, you are clear? Yeah, got the computation? Okay, great. Any questions so far? Any questions so far? Any questions? Any doubts? Okay, so Ardik is asking, sir, like in this question, date of acquisition is 1st January X1. Okay. Sorry. So date of January is 1st January X1. So, sir, we have assumed January to December as the reporting year. Yes. See, sometimes this information may be available, sometimes this information may not be available. Okay. You need to look at the information on that particular date. Most likely it will be financial year, but it could be a calendar year also. But does it impact you? The answer is no. Okay. And whenever you are taking an assumption, so it's always better to go with the assumption of financial year instead of calendar year. Okay, so that will be better. Yeah, because that's the way we work. Yes or no? Okay, so that's the better assumption if anyways that is required to be taken. Okay, so Anil is saying, sir, the revaluation date is 20th January X1. So revaluation date, where do you pick this revaluation date from? Because I understand no date is specified. So in the example, where do you see this? Where do you see this? Yeah, so it says on that date. When the acquisition has taken place, it says on that date. Means on that 1st January. Yes or no? Yeah. All right. So no, so it's same. As of now, we don't know a date of reporting, and that is not required. Okay, so don't create that confusion. Tambeshwari, Anil, clear? Yeah. Uh, Hardik is asking, yes, sir, but if the reporting year is April to March, then, sir, will be taking 70% and month ratio of post and pre. See, that is something you will be worried about only when the profits are required to be considered. Okay, and the profits are required to be split into two parts. As of now, you don't need to get into that. Okay, as of now, the date when this revaluation is done, what is that date? Date of acquisition. And if on that date some revaluation has been carried out, so you will assume that it's all done up to that date. Yeah, until unless you are told that revaluation is carried out at the year end and you are required to rework those numbers backwards. Okay, so that complexity is not there. Okay, so Ankit is asking, sir, how do we get 1,54,000? Okay, 1,54,000 is very simple. Ankit, if you look at the share capital, that is 1 lakh. If you look at the reserves, that is again 1 lakh. So what is the total amount of net assets? 2 lakhs. On the total amount of 2 lakhs, this revaluation gain you need to add because assets you are taking at revalued amount. So that will become 2,20,000. That will become 2,20,000. Now for this 2,20,000, that is the total value of the net assets. What is the percentage of A Limited? 70%. A Limited is not acquiring 100%, 70%. Yeah, so that's why 2,20,000 into 70% if you'll do, you will get 1,54,000. Okay. Yeah, Ankit, clear on this now? All right. So now Anil asking, see, I can understand some of these queries, but I would request you to please hold your thoughts for some time. Okay, some of these questions that if the reporting year is different, if the date is different, if the profit split is required, all of these adjustments will anyways cover. Okay, we'll get on to that point also. As of now, just by getting onto those points, you are creating an unnecessary confusion for yourself, which is not required. We'll cover that. Okay, so that will come automatically to you. We are not yet done. Yeah, so please hold your thoughts for some more time. Fine. So we'll keep moving on to that point. Okay, stage by stage. Fine. Okay, so let's look at one more example now. Now, H Limited acquired 16,000 equity shares of S Limited on 1st October 2000 X1 for 3,06,800. Profit and loss account of S Limited showed a balance of 10,000 on 1st April 2000 X1. Okay. Plant and machinery of S Limited, which stood in the books at 1,50,000 on 1st April X1, was considered worth 1,80,000 on the date of acquisition. Okay, and then we are also given some information about the two companies for H as well as S. Now, this information is given to us on 31st March X2. Now, please understand there are three dates. Some of the balances you are given as of 1st April X1. Then some of these financial information you are given as at the end of the reporting year 31st March X2. And the acquisition has taken place during the year on 1st October X1. Okay. So I think some of your questions should get clear now. Yeah. So this is something which you are looking at. Yes or no? Anyways, there are a lot of questions which are going to come up. Okay. Now, in this case, let's try to get into all of those computations one by one. Yeah. Now, to begin with, what do we need? First thing we need is goodwill or capital reserve. So we are told that H Limited has paid 3,06,000. Okay. And H Limited has acquired 16,000 equity shares. Now, what percentage is acquired? Can you tell me? What percentage has been acquired by H Limited? Can you quickly compute and let me know? Without looking at the solution, please. Huh? So if you look at S Limited, what is the number of shares of S Limited? 20,000. 20,000. Okay. Now, out of these 20,000 shares, 16,000 have been acquired. So what does it mean? 80% shares have been acquired. Yeah. So in the given question, the percentage holding was not available to us. So what should you do? Before getting onto goodwill or capital reserve, you need to calculate that. Yes or no? You need to calculate that. Yeah. So now we got to know that 80% shares have been acquired by H. And which means that we will also have minority interest in the given example. Okay. Now, let's try to understand some of the adjustments which will be required. Okay. Now, what are those adjustments? If you look at the plant and machinery, in the books at the beginning of the year, it was standing at 1,50,000. Okay. And on the date of acquisition, we are told that we need to consider this plant and machinery at 1,80,000. Okay. Now, in the given case, We can definitely consider that. But there is a problem. When you will consider this at 1,80,000, you also need to understand as to what amount has changed. Means if you consider this revalued amount of 1,80,000, then what is the book value? Can you just simply go by this book value of 1,50,000? Tell me, can you just simply go by this book value of 1,50,000 for the plant and machinery on 1st October 2000 X1? Tell me, can we do that? Will that be appropriate? Nitin says yes. Ajay says no. Dilip says no. Neeru says yes. So why yes? Please understand. Please understand. You are given book value of plant and machinery at the beginning of the year. Can you say that the same book value will continue on 1st October? Will this not be depreciated up to 1st October? Some of you who are saying yes, tell me, will this not be depreciated up to 1st October? Yes, it will be depreciated. Yes or no? It will be depreciated. So that's why what do you need? You need its book value as well. You need its book value as well. So where is that required? We'll talk about it. Okay. So that's why what do you need to do now? You need to compute its WDV on the date of acquisition. But for computing the WDV, do you have the useful life, the depreciation, etc.? Anything is that available to you? The answer is again no. So that is again not available to you. So that's why in this question, what do you need to compute? The depreciation rate or the useful life? So let's get on to that. Okay. So the book value of plant and machinery at the beginning of year was 1st April. Was 1,50,000. And do we have the book value of plant and machinery at the end of the year? The answer is yes. It's 1,35,000. It's 1,35,000. So that means during the year, during the full year, there has been a depreciation of 15,000 on 1,50,000. So what is going to be the rate of depreciation? 10%. So that means there is a depreciation of 10%. There is a depreciation of 10%. Correct? Yeah. Now, can we now depreciate this plant and machinery up to the date of acquisition? The answer is yes. Very simply, charge the depreciation up to 1st October. So what do you get? 1,42,500. Okay. Now, if you compare the WDV and the agreed value and the revalued amount, so what is the revaluation gain? It is 37,500. So this is the revaluation gain that you get. Yes or no? So this is the revaluation gain that you have. Correct? Yeah? Okay. Now, this revaluation gain will belong to two parties. This will belong to two parties. What are those? Of course, H, which will get 80% of this, and minority, which will get 20% of this. Yeah. So this revaluation gain, which you will have, this will be allocated amongst two parties. What are those? Holding company and minority. In their ratios? In their ratios? Yes or no? Yeah. Plus, in the consolidated financial statements, what is going to happen? Starting from 1st of October, at what amount you will record the plant and machinery? Will it be 1,50,000, 1,42,500 or 1,80,000? Tell me. Great. Riddhi says 1,80,000. So starting from 1st October 2000 X1, this plant and machinery should have been recorded at 1,80,000. So that means depreciation on the plant and machinery for the year should be calculated as something like this. Means you'll charge depreciation for 6 months on 1,50,000. And for the remaining 6 months, you will charge the depreciation on the revalued amount. Yes or no? You will charge the depreciation on the revalued amount. Correct? Yeah. So if you do that, the total depreciation, can you tell me the total amount of depreciation that you get for the year? Over to you. So if you compute the depreciation using this method, what is the total amount of depreciation that you are getting? Great. So Dilip is getting 16,500. Hardik has the same answer. What about others? So can you tell me the revised amount of depreciation for full year? Nitin is also getting 16,500. Pranav has the same answer. Yes, over to you quickly. Everyone, are you getting the same depreciation amount? 16,500? Tell me quickly. Are you getting the same amount? Everyone. Okay, great. Riddhi, Anil, they have also confirmed. Very. Now, out of this 16,500, 15,000 is already recorded. Why do we say that? Because this information is available to us as on 31st March X2, wherein the value of plant and machinery at the end of the year is 1,35,000. So that means depreciation amounting to 15,000 has been recorded. So that means the balance amount of depreciation means 16,500 less 15,000. That has not been captured. That has not been captured. So that you need to adjust. So this additional impact on the P&L you need to adjust. Yes. Yeah. So this impact will again go to two parties, similar to what you did for revaluation. Similar to what you did for revaluation. Yeah. So this 1,500 additional depreciation impact will be shared by two parties. What are those? Holding company and minority interest. Okay. In proportion to the ratios they hold. In proportion to the ratios they hold. Okay. Everyone clear? Yeah. Clear on this? In proportion to the ratios they hold, this will be shared by them. Yeah. Clear? So that's how this allocation will be required to be done. Fine. Any questions on this? Any questions so far? Over to you quickly. Any questions? Okay, so Tambeshwari is saying date is explained in the chart. Which chart? Are you talking about the information in the question? Yes, the dates are given. And anyways, in the question, the dates will always be given to you. So if that is the question, yeah, so dates will always be given. Okay. Yeah, everyone clear? Any questions? Okay, so Tambeshwari is saying, can we prepare a chart? See, all of those will form part of your workings. So in the workings, if you want to just do that, you can always feel free. Yeah, but you'll have to create working notes for that. So one could be your rough workings, one is your working note. You can always write that in your working note. Huh? Okay, though that is not the requirement of the question, but that helps you, you can do that. There's absolutely no problem in doing that. Okay. Any questions so far? Any doubts so far? Tell me quickly. Are you clear? Yeah. So these are all very, very important adjustments in relation to consolidation. When you talk about goodwill, when you talk about capital reserve, some of these revaluations which are required to be looked at, all of these things are important. And all of these things are asked in the exam. Okay. So any questions if you have? Tell me. No? Everyone clear so far? Yeah? Everyone clear? All right, great. So I think we can take a break now. Yes? And we'll continue after the break. So Tambeshwari is asking what will happen with this 3,06,800? See, this you'll use for calculating your goodwill or capital reserve. In the current question, we don't do that. Yeah, but as you move forward, you will be required to do that. Okay. Yeah. All right. So Nisar, we can take a break now. Hi, welcome back. So let's continue with our discussion. Okay, so now we'll pick up some more examples. All right, so now let's look at this question number 2. XYZ Limited purchased 80% shares of ABC Limited on 1st January X1 for 1,40,000. Okay, issued capital of ABC on the date of acquisition. So now that is given on the date of acquisition. 1 lakh and the P&L balance. So what do you mean by P&L balance? That's the reserves. So 1 lakh, 60,000. So all in all, what is the value? 1,60,000. Now during the year ended 31st December X1. Now in this question, we have calendar year. ABC Limited earned a profit of 20,000. Okay. And at the year end, it declared and paid a dividend of 15,000. Okay. Show by an entry how the dividend should be recorded in the books of XYZ. Plus, what is the amount of minority interest on 1st January X1 and 31st December X1? Means you are also required to compute the minority interest on the date of acquisition as well as the year end. You are also required to check, means calculate the amount of any goodwill or capital reserve which will be there on the date of acquisition. Okay, so three things are required. One, of course, on the date of acquisition, goodwill, capital reserve, minority. Second, on the date of reporting, the same goodwill, capital reserve that you carry plus the minority interest. Third, accounting treatment of the dividend which has been declared by ABC. Okay. Now, there are few points which we need to consider before we get on to this point. Okay. Now, during the year, when this profit has been earned by ABC amounting to 20,000, can we say that the dividend has been paid out of the profits which are generated during the year? Or should we assume that this dividend is paid out of the profits which were, or the reserves which were there prior to the profits fund? What do you think will be the best assumption? So if you look at ABC, ABC had got reserves at the beginning of the year. Yes or no? Amounting to 60,000. And ABC has also earned a profit of 20,000 during the year. So when this dividend has been paid, what do you think? Out of which of these dividends should be considered to have been paid? From the profits during the year or from the reserves which existed at the beginning of the year? What do you think will be the better assumptions? Over to you quickly. I think Sania, Larry, Tambeshwari, they are saying profits. Yes, that's the best assumption. Why? Because if the profits are sufficient during the year, then the profit should be considered. Yes or no? Now, okay. The next question. The profits which you get to see amounting to 20,000, what will you call it as? Pre-acquisition profit, post-acquisition profit, or a mixture of these two? Tell me. What will you call this as? Pre-acquisition, post-acquisition, or a mixture of these two? Over to you. Okay, Hardik says it's a mixture. Rachna says it's a mixture. Tambeshwari says it's post-acquisition. Ajay says it's pre-acquisition. Rachna says full year. No, I'm not talking about full year or half year. I'm saying to what period does it belong to? Pre-acquisition, post-acquisition, or you will say no, it's the mixture. Abhishek says mix. Tanu says pre-acquisition. Rachna says both. Ankit says it's a mixture. Can you tell me on what date acquisition has taken place? Can you tell me on what date this acquisition has taken place? Over to you quickly. I can see a lot of responses as around the pre and post acquisition profits. So let's try to understand this. Okay, great. So everyone is saying the acquisition has taken place on 1st of January X1. And what is the reporting year? What is the balance sheet date? Can you tell me? What is the balance sheet date? Tell me. Larry says 31st December. So if you have earned any profit starting from 1st of January X1 up to 31st of December X1, will you call it as post acquisition profit or pre acquisition profit or mixture? Now tell me, what will you call it as? Are these profits earned after the date of acquisition or not? Tell me. Are these profits earned after the date of acquisition or not? Sai says post acquisition. Tanu is still saying pre acquisition. Yeah. So let me just take you to this chart. Okay, because there's a lot of confusion. Huh? You are saying on 1st of January 2000 X1 acquisition has taken place. Okay. And this is also the start of the reporting year. Fine. Year ends on 31st December 2000 X1. So the period which you have after acquisition, what do you call it as? Can you tell me? Period that you have after acquisition, what do you call it as? Tell me, everyone. Post acquisition? Yeah. Now, for what period these profits have been earned? The profit of 20,000 has been earned for what period? This period only? Yes or no? So it will be for the calendar year only. Yes or no? If that is the year, that means profits are for this calendar year. So if the profits belong to this calendar year, what will you call it as? Profits belonging to post acquisition period. So that means these are post acquisition profits. Everyone clear now? Everyone clear? Yeah. So some of you who are saying mixture, some of you who are saying pre-acquisition, I couldn't understand. Yes, how are you considering that? Are you now clear on this? Yeah. So will you still say that this is a mixture? Tambeshwari, please understand this question. We'll come on to some different situations later on. Okay, let's focus on this right now. Yeah, Tanu is clear on this. Okay. So now the entire profit which subsidiary has generated, that has been during what period? Post acquisition. Okay, so that's why all of these periods that you have are what? Post acquisition profits. Okay. Now, whenever any dividend is distributed, now what's the date when the dividend has been distributed? So on this date, there is a dividend. Okay, so this is the date when the dividend is distributed. Okay, now any dividend which is paid out of post acquisition profits. Now this dividend, can we say it's paid out of post acquisition profits or not? Tell me. Yes or no? So this dividend has been paid out of post acquisition profits or not? Yes. Yeah. So any dividend which is paid out of post acquisition profits, that will go to P&L of the holding company. Okay. So that will be recorded as income of the holding company. Understood? Yeah. So the dividend which is declared out of this is recorded by holding company. as income. So what do you mean by as income? Means this will go to P&L. This will go to P&L of holding company. Okay. So that's the accounting treatment you can say, which is required to be done as around post acquisition profits. Now, please don't ask questions around pre acquisition or mixture. I'll come to that later. Let's currently focus on this. Okay. Everyone clear on this? Yeah. Now, let's go back to the question and let's get on to the accounting requirements which we are required to do. Now, in this question, we understand that the holding company, which company is holding company? XYZ. XYZ will record the dividend as income. Okay. Now, what is the amount of total dividend? 15,000. Total amount of dividend is what? 15,000. Okay. Now, can we say this entire dividend has been paid to the holding company? Will it be appropriate to say that? Can we say this entire amount? Science says no. Why? Because only 80% shares are held by a holding company. So that means out of this 15,000, 12,000 means 80% will be recorded by XYZ Limited in its P&L as income. So what is the accounting entry XYZ will pass? Bank debit to dividend income or to profit and loss account. Clear on this? Yeah. So that's the first requirement of the question. So question says, how should this dividend be recorded by XYZ? So every time the holding company will record the dividend, what do you need to check? Whether that dividend is paid out of post acquisition profits or pre acquisition profits. For post acquisition profits, we have discussed what is going to be the accounting treatment. Okay, clear? Everyone clear? Okay, now we will get on to the other requirements. So what are the other requirements? To calculate goodwill or capital reserve, plus to calculate minority interest. So that we have done quite a lot. Yeah. So let's get on to that. So do we have the purchase consideration? Yes. It's 1,40,000. Purchase consideration is what? 1,40,000. Okay. Now from the purchase consideration, what do we need to deduct? Net assets. So do we have the amount of net assets? Yes. 1 lakh plus 60,000. 1 lakh plus 60,000. That is the total value of net assets. So 80% of that you will take. 80% of that you will take. So what is that? 1,28,000. Okay. So now 1,40,000 has been paid as against net assets worth of 1,28,000. So what do you get? Goodwill? Goodwill? Okay. Clear? Yeah. All right. So goodwill has been computed. Now, can we compute the minority interest? Over to you. Quickly, on the date of acquisition, what is going to be the amount of minority interest? Please don't look at the solution. Huh? What is going to be the amount of minority interest? We discussed that minority will pick up its share of net assets. So do we have the net assets available? The answer is yes. On those net assets, one portion has been taken up by holding company. The remaining portion, who will take up? Minority. Yeah. So out of 1,60,000, 80% has been taken up by holding company. Remaining 20% means 32,000 will belong to what? Minority. So what is going to be the amount of minority interest on the date of acquisition? 32,000. 32,000. Okay. Clear? Now. Okay. So now we will continue on this. Okay. Now in this question, on the date of acquisition, we understand the amount of net assets was what? 1,60,000. Correct? Amount of net assets was 1,60,000. Okay. On the basis of which we computed minority interest, that was 20%, means 32,000. Now, we are also required to compute the minority interest at the end of the year on 31st December 2000 X1. So now what do we do? Once again, the same approach is required to be considered. What do we need? If you can compute the net assets at the end of the year, if you can compute the net assets at the end of the year, what will you get? A proportionate share will belong to minority. So how do you compute the net assets at the end of the year? Do we have any such information? The answer is yes. During the year, there is a profit of 20,000. Yes or no? So therefore, this net asset of 1,60,000, this will increase by 20,000. So this net asset of 1,60,000, this will increase by 20,000. And out of these profits, a dividend of 15,000 has been paid. So that will reduce the amount of net assets. That will reduce the amount of net assets. So all in all, what is going to be the amount of net assets at the end of the year? 1,65,000. 1,65,000. Yes or no? So this will be the amount of net assets at the end of the year. Correct? Now, how do you calculate minority? Very simple. Here again, to calculate minority, what do you need? 20% of this. So can you calculate 20% of 1,65,000? What do you get? Of this 1,65,000, if you calculate 20%, what do you get? 33,000. 33,000. Okay. Everyone clear on this? Yeah. There is another way to calculate minority. What is that? See, either you can look at this closing balance of net assets and apply a percentage to this. Or what you can do is, you can just start with the opening balance. So this is the opening balance. Yes or no? You can start with the opening balance. And to this opening balance, you can add or deduct any changes to the net assets on a proportionate basis. So change to the net assets was what? During the year, net assets have got changed by 5,000. Means net, if you look at, those have changed by 5,000. They have increased by 5,000. Okay. So you can just give the proportionate share of that to minority. So what is going to be the 20% of 5,000? 1,000. 1,000. Okay. So you have the opening balance of 32,000. To this opening balance, what do you need to add? 1,000. So what do you get? 33,000. Okay. So either of these approaches you can follow. You will get the same answer. Clear? You can follow either of these approaches. Either you can just move with the opening balance. To this opening balance, you need to add the changes to the net assets. Or you can just calculate the net assets at the end of the year, or you can say the closing balance of the net assets and compute that proportionate amount. Yeah, because minority is what? Every time you need to be clear about it. Minority is very simply a proportion of the net assets. That is what you also call as equity method. Okay. So So minority is picking up proportionate share. Clear? Yeah. All right. So I can see some questions coming up. Hardik is saying, sir, like the dividend paid to minority interest, can we add it to the minority and get the answer? So that is exactly what we have done. Yes or no? So in a way, that adjustment of profit and dividend in respect of minority has also been considered. That's why you have taken this as net 5,000. Yes or no? Yes or no? So in a way, you have done that. Clear, Hardik? Yeah. Okay, Sai is asking, sir, if in the consolidated financial statements is for year on year, that is in the subsequent years, so will this goodwill keep on changing with change in the reserves of the subsidiary company? No. So goodwill once computed, that will not change. Similarly, capital reserve once computed, that will not change. Yeah. As around the goodwill, you can always amortize that. But that will again be dependent on the principles of amortization. Huh? So it will either be amortized or impaired. So that's how it will work. Yeah. But in terms of its gross value, that will not change. Okay. Clear? So I'm clear on this? Everyone clear? See, currently, with the help of this example, what we have tried to look at is the accounting treatment of dividend. But in the example that we just discussed, there was a dividend out of post acquisition profits. Dividend could also be declared out of pre acquisition. Okay, so that also we need to consider. So we'll get into that point also. Hardik is asking, but sir, his share was 3,000. So like 32,000 plus 3,000? No. See, 3,000 is what minority has actually received. Please understand. Now. Let's suppose minority is what? Let's put a name to this minority. Let's suppose the name of minority is B Limited. Please understand. The reserves of subsidiary, they have not been paid to B Limited as yet. So when you are looking at these net assets of subsidiary, can we say that these have been paid to B Limited minority interest? Tell me. Hardik, can you say that 1,60,000 amount has been paid to the minority interest? The answer is no. Okay. So something which has been paid, that is already grown from the books of subsidiary. Okay. We are looking at the amount which the subsidiary is holding and which belongs to its owners. Something which the subsidiary is not holding. Why? Because that has already been paid to the owners. So that is there in the books of owners. Why do you need to consider that? Okay. So now we are looking at the net assets. What do you mean by net assets? Means net assets or the reserves or that part of the subsidiary which is undistributed but which belongs to minority or to the holding company. So that is what you are trying to compute. Okay. So if you are saying 3,000 is the dividend which belongs to minority, so that's correct, but that is actually received by them. We are just trying to look at that after paying that dividend, what is left out with the subsidiary company, a portion of which will belongs to minority. So that is what you are trying to compute. Clear on this? Are they clear? Yeah. Okay. So this is all undistributed part. Yeah. All right. Any more questions on this? Any more questions? Any more doubts? No? Clear so far? Great. All right. So let's look at one more example now. Okay, so let's move further. We'll pick up one more example now. Okay, so this question 3. X Limited acquires 70% of equity shares of Z Limited as on 31st March X1 at a cost of 70 lakhs. Following information is available from the balance sheet of Z Limited as on 31st March X1. Okay, so on the date of acquisition, some information as around the subsidiary. Of course, Z is the subsidiary and X is the holding is available. So PP is given, investments. So these are the investments of subsidiary, not the holding company. Yeah? Okay. Current assets, loans, advances, then some liabilities. Debentures are there, current liabilities are there. Okay. Following revaluations have been agreed upon, and the revaluations have not been included in the above figures. PP to be revalued upwards 20%. Investment to be revalued downwards 10%. All right, so we'll do that. No worries. Yeah. Z Limited declared and paid dividend at the rate 20% on its equity shares on 31st March X1. Okay. X Limited purchased the shares of Z Limited at the rate rupees 20 per share. Okay. You are required to calculate goodwill or capital reserve, whatever be the case, on the date of acquisition. That's it. Okay. Now, in this question, let's try to understand one aspect as around the reporting year. Now, if you are looking at the financial year, so it appears to be the case of financial year, yes or no? Tell me, everyone. So this appears to be the case of financial year, looking at the information in the question. Tell me, what do you think? Yes or no? Over to you quickly. It's a case of financial year or not? So do we have calendar year or financial year? Financial year? Yes. Okay, so now let's assume that this is the financial year ending on 31st March X1. March X1. Okay, and let's go. This is 1st April X0. Okay. Now, we are told that the acquisition has taken place on this date. So this is the acquisition date. Right? And we are also told that the dividend has been paid on 31st March. So on what date dividend has been paid? This date. Right? So when the dividend will be paid, there are two ways dividend can be paid. Okay. So either the dividend can be paid from profits for this year, number one, or the dividend could be paid from the reserves which would exist on this date. Yes or no? Yes or no? So even if you say that dividend is paid out of reserves which existed on 31st March X1, what would it mean? What would it mean? So if you look at the reserves at the end of the year, yeah, so it will be a composition of A plus B. So it will be a composition of A plus B. Yes or no? Always tell me. So it will be a composition of A plus B. Tell me quickly. Yeah. All right. So which means that whether you consider these profits for distribution of dividend or these reserves for distribution of dividend, in both the cases, what period do they belong to? What period do they belong to? Can you tell me? Can you tell me what period do they belong to? Very good. Larry says pre-acquisition, sir. Pre-acquisition. Okay. So that means the dividend in the given question, what will you consider that as? That will be considered to be paid out of pre-acquisition period, pre-acquisition profits or reserves. Understood? That will be considered to be paid out of pre-acquisition profits or reserves. Okay. Now, whenever any dividend is paid out of pre-acquisition profits or reserves, whenever you have any such dividend paid out of pre-acquisition profits or reserves, what do you need to do? How is that required to be accounted for by the holding company? Okay, so every time we are talking about the holding company. So how will the holding company record this as? Any thoughts? Yeah. So Anil says needs to be capitalized. So what do you mean by this? Larry says it will go to income. No, it will not go to income. This will be deducted. Okay, so this will be deducted from the cost of investment. So that's the treatment of pre-acquisition dividend. Why is that so? Because today when you are acquiring this company, so for everything which belongs to this period, this consideration would be agreed for. Yeah. So let's try to understand this accounting in that particular example now. Fine. Yeah. Okay. So let's look at the accounting treatment in this example now. Okay. So we'll get on to this solution now. To begin with, what do we need? Goodwill or capital reserve. In fact, that's the requirement of the question. But for calculating goodwill or capital reserve, we need the net assets. So do we have the net assets available? Yes, net assets are available in the question, but some of the assets are required to be revalued. So what do you need to do? Plot all of these numbers for the calculation of net assets, and wherever revaluation is required, do that. Okay. Yeah. So PPE, increase that by 20%. Investments decrease by 10%. Current assets, take them as it is. Loans, advances, no change. So the total assets you have received. Now, debentures and current liabilities, you will reduce that. No change in the book value. So what do you get? So this is the amount of net assets of the subsidiary company. But please remember, this is the total amount of net assets. So generally a mistake that you make in the exam is what? You don't take the proportionate share. Generally, what you will do is you will compute the net assets and you will compute the goodwill against that. But please remember that this is the total amount of net assets of the subsidiary company. What is the portion which X Limited has acquired? 70%. So therefore, the proportionate net assets will be what? 96.95 lakhs. Yes or no? 96.95 lakhs. Correct? Okay. So the net assets amount which we'll use for goodwill or capital reserve calculation is what? 96.95 lakhs. Yes or no? So that's the amount you will use. Yeah. Anil is asking, sir, do we have to do the revaluation of the assets? Yes. Anil, exactly that is the thing that we have done. Okay. So if you look at PP, if you look at investments, We did that. Why? Because only these two assets are revalued. Remaining are not revalued. Okay, clear? Then I think this question comes from Ankit and Abhishek. Sir, cost of investment means what? We'll talk about it. Okay, don't worry. We'll look at that. What do you mean by cost of investment? And how is that required to be reduced? Both the things we'll consider. Now, if you go back to the question says X Limited has paid 70 lakhs for acquiring 70% shares. So what do you mean by acquiring? Means X Limited has invested in Z Limited? Yes or no? Acquisition means what? X Limited has invested in Z Limited. Correct? Yeah? Tell me quickly. That means X Limited has invested in Z Limited. Ankit, please confirm. That is what you call this acquisition as investment only? Tell me. Now, for getting this investment, a price has been paid, a cost has been paid. So, what will you call that as? Cost of investment? Cost of investment. So, what is the cost of investment in the given case? Ankit, over to you. What is the cost of investment in the given example? Tell me quickly, what is the cost of investment? 70 lakhs. Okay, understood? This purchase consideration is nothing but the cost of investment. So you can say there is another term which is used for purchase consideration. And what is that? Cost of investment. Because purchase consideration is what? The price that you are paying for making that investment. Yes or no? Price that you are paying or the cost that you are paying for making that investment. So to begin with, we have this cost of investment available in the question. And what was that? That was 70 lakhs. But because a dividend has been paid out of pre-acquisition profits, so that's why we are required to reduce this cost of investment. Okay, so this cost of investment we are required to reduce. Only then we will take this number for calculation of goodwill or capitals. Why? Because this reduction is required to be done on the date of acquisition. Okay. Now the next problem is what? The next problem is to calculate the dividend amount, because dividend amount is not known to us. Yes or no? So let's get on to the calculation of dividend. So Z Limited declared and paid at the rate 20% on its equity shares, which have a face value of rupees 10 per share. Okay. Now, when the shares were purchased, they were purchased at the rate rupees 20 per share. So let's use this information for calculation of dividend. Okay. Now, total cost which has been paid for acquiring 70% shares is what? 70 lakhs. So this is the total amount which has been paid. Means whatever number of shares X Limited has acquired, an amount of 70 lakhs has been paid against that. Correct? Okay. Now, for each share, we are told for each share, rupees 20 has been paid. Yes or no? For each share, rupees 20 has been paid. So we understand the total amount paid and we understand amount paid against one share. So can we not calculate the total number of shares using this information? Tell me. Can we calculate that or not? Yes. So therefore, what is going to be the total number of equity shares which X would have acquired? Please understand. Which X would have acquired. So that will be 70 lakhs divided by amount paid per share. So that means X would have acquired 3.5 lakh shares. Now, does it mean that Z Limited has got 3.5 lakh shares only? The answer is no. Why? Because these many shares are against 70% only. So if you gross it up, they will become 5 lakh. They will become 5 lakh. Correct? Okay. Now, dividend on each share is what? 20%. So we are told dividend on each share is 20%, wherein the face value of each share is rupees 10. So what does it mean? For every share, a dividend of rupees 2 has been paid. Correct? So if the face value is rupees 10 and dividend is paid at the rate 20%, so what does it mean? That a dividend of rupees 2 per share has been paid. Correct? So if you calculate this dividend at the rate 2 per share on 3.5 lakh shares, what do you get? 7 lakhs? What do you get? 7 lakhs? Yes or no? 7 lakhs is the amount you will get. Correct? Now, this 7 lakh is the dividend amount which has been paid out of pre-acquisition profits. Now, what makes you say that? That is something we have already discussed. We have already assessed that any dividend which has been paid in the given question is out of pre-acquisition profits only. Okay? Out of pre-acquisition profits only. Okay? So that's why this entire amount will go and reduce the cost of investment. So what is the cost of investment? 70 lakhs. From that 70 lakhs, you will reduce this 7 lakhs. So what is going to be the cost of investment which you will use for calculation of goodwill or capital reserve? 63 lakhs. 63 lakhs. Okay. Now, in a way, we can say that 63 lakhs has been paid to acquire net assets worth of 96.95. So is the payment made in excess or in short? So do we have an excess payment or short payment? Tell me. So do we have an excess or short payment? Short payment. The moment you say there's a short payment, what do you get? Goodwill or capital reserve? Goodwill or capital reserve? Capital reserve. So that's why in the question, what do you have? Capital reserve 33.95. 33.95. Clear on this? Clear on this? Everyone? Any questions? Any doubts so far? Quickly, any questions? Any doubts so far? No? Everyone clear? Because I understand you also had a couple of queries you asked me in the previous session. So maybe the remaining time we can just, spend discussing some of those queries now. Okay, so we can just close our discussion for today over here, but we'll just move on to your questions, doubts now. Okay, so any questions? Okay, Abhishek is asking, sir, can we say that the consideration is 63? Yes, in a way. In a way, you can say that. And let me just also explain you principally. Let's also try to understand the difference. See, what is the rationale? Let's suppose today you go and acquire a company. Fine. Let's suppose today you go acquire a company. Okay. You understand that this company is going to pay a dividend of rupees 10. Okay. So if you purchase the shares of the company, so what will you get? Rupees 10 as dividend. And you are paying an amount of rupees 100 to acquire these shares. So effectively, net, what is it that you have paid? Effectively, net, can we not say that you have paid 90? Why? Because at one place you are paying 100 and getting 10 back immediately. or getting eligible for 10 immediately. Yeah. So if you get eligible for profits after the date of acquisition, so that is something you have earned. But this rupees 10 profit belonged to other shareholders, or you can say the previous shareholders. But you are getting this today. Why? Because you have paid the price for this. Okay. Yeah. But by paying the price for this, you are also getting the cash immediately back. So that's why effectively, what is it that you have paid? 90 only. Okay, so that's why we say the cost of investment is what? Net of pre-acquisition dividend. Clear on this? Yeah. So conceptually, are you clear on this? Yeah. Okay. So Tambeshwari is asking, sir, what's the difference between illustration and 2 and 3? I think that is something you need to tell me, Tambeshwari. Yeah? So what is the difference between these two? What difference did you find between these two? Tell me your thoughts, sir, or anyone else who can help Tambeshwari on this. What is the difference between these two that you have observed? Quickly, between illustration 2 and 3, what difference did you find? Over to you, quickly. What difference did you find? Anyone? So if you ask me, I would say that was about the accounting treatment of pre-acquisition dividend and post-acquisition dividend. Yes or no? Yeah. So that's largely the difference. Otherwise, a lot of situations can change. Okay. So that's the main difference. Understood? Yeah. All right. So now what I'll do is, okay. So I understand Hardik had one query. So that was around chapter 13. Huh? So that was around amalgamation. So what I'll do is I'll just move on to that uh, query as around the amalgamation. Okay, so he asked me about this question, which is there on page 13.64. Just a minute and let me just open this document. Then I'll also share this on the screen, Hardik. Or maybe you can also open this. Okay, so I understand this query was around illustration 11. Yeah, so that was around illustration 11. So let me just quickly share that. Okay, so the query is that there's a company which is acquiring, this is going for internal reconstruction, and this is also acquiring the business of uh, another company. So you're not able to understand the question. No worries, we can quickly read this question. So we are given the balance sheet of two companies, A and B. Okay. Then we are told, okay, so we are told B has acquired business of A. So who is the acquiring company? B. Means purchasing company is B. Or transferee is B. And transfer is A. Then we are told following scheme of merger was approved. Bank agreed to waive off loan of 60,000 of B. No, I think this was a point of confusion for you. That why was there a waiver on loan of B? Possible. Huh? How does it matter? So there could be some problem in the business of B as well. So is that a problem? No. B Limited will reduce its shares to rupees 10 per share and then consolidate rupees 10 share into rupees 100. No worries. So see, in a way, the question is just trying to add some more adjustments. But principally, whatever accounting that you have discussed for amalgamation, will it change? The answer is no. Okay. Then it says shareholders of A Limited will be given one share of B Limited. Now this share which you will compute after taking the adjustments 1 and 2 in the books of B Limited. So that's the only thing. Okay. Otherwise, there is nothing different. Okay. Clear on this? Yeah. Okay. So Sukhveer is saying, sir, I have a doubt in illustration number 10 in respect of computation of equity share capital. All right. Page 13.63. No worries. Tell me I am on page 13.63. So what is your doubt? Tell me what's the question? Hardik is asking, sir, with internal RECO, Yeah, so see, please remember one point in the question. Whenever there is a requirement of the question, you need to follow that. You should not think that why the question is asking you this or how come that is possible. So if a company is going for internal reconstruction, can it do that? So if the question is saying that, you follow that. What is the problem? If you say that no, the information is not sufficient to solve that, I can understand your point. If you say that this doesn't make sense, ignore that, because the examiner is just trying to test your knowledge as around two things. One is on internal reconstruction and then after amalgamation. So is that a problem? The answer is no. Okay. So all of those logics you should not try to apply therein. Why? Because at times that's the intent of the examiner. So there's no problem as such in the question. The question's objective is what? To test your knowledge. Yes, you can very well say that the information is not sufficient, so how do I answer? So that could be a concern, but that is not the case over here, right? Okay, so Sukhveer is asking, sir, in respect of computation of equity share capital, here the equity share capital that you calculate is taking whole amount of preference plus equity. Why not just taking amount of only equity share capital? Okay, so I think I'll have to understand the requirement of the question, or it's a lengthy question. So I would suggest I would just make a note of this, Sukhveer, and as we discussed, so I'll have to come back to you on this. Okay, so I'll make a note of this point which you just mentioned. Okay, so this is around illustration 10. Okay, so page 13 points. Okay, so in the next session, we can discuss this. Fine. Okay, so Tambeshwari, I have taken a note of your query as well. See, for these lengthy illustrations, I'll just make a note of this. Okay. All right. Any more questions? See, if there is any specific query other than some of these illustrations, that definitely we can discuss right away. But if you refer the questions, I'll have to go through the question first, because without going through the question, if I just answer, that may be inappropriate. Hardik is asking, can you please tell the working of mixture? So that mixture again will cover. Don't worry. So we are going to face questions. And anyways, to understand that conceptually, whenever you'll have a mixture means when there is a profit belonging to pre-acquisition as well as post-acquisition profit. So you'll have to divide that. So let's suppose there's a dividend 20,000. Say 10,000 is for pre-acquisition profits, 10,000 is out of post-acquisition profits. So 10,000 will go to income of the holding and 10,000 will be reduced from the cost of the investment. As simple as that. Okay, clear? In some of the cases, this ratio could be different. So depending on the time period, you will have to calculate that. So in the example that I have just discussed, I have assumed that to be half of the year. At times it could be only 1 month. At times it could be 1.5 months. So you can just calculate that proportionately. Okay. All right. So I think we can just close our discussion now. Yeah. Okay. But one request, which is very, very important, that we are going to continue on consolidation. So we are not yet done. Okay. We are going to continue on AS21 in the next session as well. So that's why it's very important that whatever we have discussed so far, you revise that. That will help you in understanding the concept better when we meet next. Yeah. So please take care of that. Okay. So thanks everyone for your time and for this wonderful participation once again. Thanks so much. Nisar, we can close the